Okay, so a lot of people know my story, but like we're talking about it's kind of this. We're talking about how to build a blueprint for business owners using infinite banking. Why business owners? Why am I so passionate about business owners? Why do I want to become a business owner? This goes all the way back to when I was 13 years old. I grew up very poor. My adopted parents, one drove a trash truck. That's what my adopted father did for a living and for minimum wage back then. I think the trash truck drivers do okay now, but I don't think anybody really aspires to be that. And then my adopted mother worked in a casket factory. So when I was a challenging kid. So she said, I'm going to make you work when you, at 13 in the casket factory during the summer until football started, right? I couldn't wait for football to start. So I showed up at 6 a.m. And I was supposed to swing a hammer for 8 hours a day. We were the casket factory. It was really the hardware that goes on the casket. So it's metal. So you're forming the metal for the handles, like you're bending it. That's what I did. Okay. And I didn't get to do any of the cool polishing stuff or anything like that. They would plate it, put like a nice coat on it, and they'd polish it, and it came out looking great. Well, the thing that I noticed as I'm working there, and I'm like, again, swinging a hammer for that long every day with, there's breaks, but isn't the most enjoyable thing in the world. So I'm watching, and you're not using your brain, and I'm watching the business owner, Dwayne McIntyre. He'd come in for a couple hours one day, not come in the next. And it confused me. I was like, well, doesn't he have to work? This is his business. No, he didn't have to. He was getting other people to trade their time for money. And he had other people's money, other people's time, other people's effort, creating his financial freedom. And so I was fascinated with business ownership. Fast forward a little bit, I become a financial financial planner right out of college. And I find that the only people that really would talk to me were people that all these other financial planners weren't going after. It wasn't the doctors and the lawyers and the CPAs. It was the blue collar business owner, which those were my people, right? I worked that job in the summers. I understood what a business did, right? So I would work with these blue collar welders, plastics formations company, you name it, I would work with them. And I learned how a business works, and I learned how the business runs. It's why I wrote Ownership. Is I learned about taking ownership and making that shift from consumer to owner of the business. So any of you out there that are business owners, I have this affinity with business owners, and I've used this system to buy over 30 businesses. Infinite banking system, not the infinite banking insurance policy, the infinite banking system. And I've done it for years, over and over and over. And there's a system to it. There's a blueprint to it. So business owners don't fail because they lack ideas. They fail because they outsource the most profitable business in the world, banking. Even J.D. Rockefeller said the biggest hindrance from him going from being dirt poor to the wealthiest man in the world was the banks. But as he got to be the wealthiest man in the world, guess what he said? I am the bank. And so today, I want to talk to you about being the bank. And if you saw my license plate, and I only have so many letters, so don't make fun of this, but it says be the bank. Be the bank. And so that's all I want you to do is be the bank in your life. Somebody's going to be the banker in your life. It might as well be you, because it's the most profitable business in the world. Okay, so let's look at the core problem. Is business owners think their issue is cash flow or financing growth or a deeper problem? It's outsourced capital, control of capital. It's outsourced control of capital. That's the biggest problem. And if you had access to all the capital that you needed, then every time that there was an issue, you would just go get some. So, when I was doing wealth management, a financial babysitter, I had $700 million under management. But the wealthiest people that I knew, they didn't rely on Wall Street. They own businesses and banking functions. And it was all about where do they get the money. And so every time they use a business owner that doesn't control the banking function uses a bank, they transfer wealth and interest. They lose velocity of money, meaning that money doesn't keep moving. I got to pay it to this person, the interest, right? And they hand control over to someone else. In this case, the bankers. Control is everything when it comes to money. So it's like giving your teenager the keys to the car and hope it comes back with more gas than it left. Or like the car came back with more gas. Unless you gave them the credit card, it's not coming, right? And so that's what kind of like letting somebody else control the banking function. So it's the system, not the insurance policy. The misconception that I hear and I see every day, even this morning at 10 a.m., my 10 a.m. meeting, it's not about the policy, it's about the system. The policy is the engine to the system. We need the policy because that's the only way to create an and asset, because then we have our money growing inside that insurance contract, guaranteed every single day. And we get to use the insurance company's money to go buy assets that cash flow. Seems simple, and it is simple. But as soon as I stopped thinking about it as insurance and started seeing it as a cash flow engine, that's when I bought 30 companies using the system. Okay. And, there's a famous example of Walt Disney. When Walt Disney wanted to create Disneyland, okay, that was first before Disney World, there wasn't a bank in California that would give him $1. They didn't believe in his idea. So he borrowed money from his life insurance contracts to start Disneyland, right? That's the famous one. And for me, I read Nelson's book and I said, oh, that's a great way to sell life insurance, but I don't want to sell life insurance. So I'm not going to do it. Because my brain and my paradigm was so much in cement from being in the financial services business that it was harder for me to break the paradigm. So why am I so passionate about teaching it? Because it took me a long time to like break that. I had to see Nelson. I was probably in the 20th hour in 2 weeks seeing his presentation before it hit me. And it was like, boom, wait a minute, I've been thinking about this wrong. You're redirecting. So like, here's the blueprint, or I'm sorry, let's go back to the foundation. Is remember that the insurance you start to see as the cash flow engine because it drives the system. Okay. And so here's step by step. The first thing is capital capture, right? Is you redirect payments from banks into your system. Now that seems simple, and I can't tell you what that means individually for you, but that's the first step. Is how can we stop paying the bank's interest and start paying ourselves? If we're putting money in a qualified plan that the government controls or controls how much of it is ours, or if we get penalized or anything else, we can stop that, start recapturing some of that interest right away. If we have money that's sitting, meaning it's dying, it's stagnant, it's not moving, it's not creating velocity, we can use that. We're like trying to find how are we going to fund our bank? So we're capital capture and retained earnings sometimes at 0.5% or whatever the bank is paying you. It could be compounding inside of an insurance contract, right? So once we have the capture, we've developed the system, we have the policy in place, right? And at Create Tailwind, we don't just sell you the policy and stop educating, coaching you. You get unlimited coaching. Why are we going to do that? Because the more you understand this, the more you're going to want to put through it. So our clients are always wanting to expand, right? So now we got to leverage that money, meaning go get the loan from the insurance company and deploy it and then redeploy it over and over again as fast as we can. But I use policy loans to buy this first business. In this one example that I used is I needed $75,000 down for this business, right? By the way, the business was 3.3 million and I only had to give them 75 grand down. Take a loan from my policy. August 1 was the close in this business. Well, somewhere between August and October, we found $400,000 of inventory that had been written off, but we still had it. It was old speaker bars, right? Speaker bars. Yeah. And so we sold them for 400 grand. I mean, they were 400,000 is what it was worth. Okay, so now think about that. We did that by the end of the year because it was electronic season and people wanted cheap sound bars at that time on Amazon and eBay. And so I put in 75, I made 400. But wait a minute, I didn't put in 75. It was only the interest on 75,000 August and the end of December, right? It was like $3,750 to make 400 grand. If the business went up in flames and I didn't have insurance the next day, it was still profitable. But now that business is generates almost seven figures a year. And I put $3,750 in it. That's pretty good. What's that rate of return, right? I mean, it's the rate of cash flow, it's the rate of appreciation. I could sell the business if I wanted to, which why would I? Right? I've got a great team running it. Okay, so JC Penney survived the depression, the Great Depression with policy loans. That kept JC Penney afloat. All right, so now we have the policy. The insurance company is giving us their money because they have to, and we're deploying it out there and we're leveraging it. That's our step so far. Now we got to create velocity. You pay it back at your pace and you reuse that same dollar over and over again to buy more cash flowing assets. So that $3,750, that 400 grand that I made, what did I do with it? I put it back into the insurance contract. But the $3,750 that I paid back in interest, I redeployed it and bought another business and then another business and then another business. So what's my rate of return on that $3,750? Again, it's infinite. It's still going. Banks figured out how to rent us our own money. With IBC, you flip that script. You're the bank, you're the depositor, and you're the borrower. Banks don't like that. They want to be in your pocket. They will be super nice to you as long as you're making money and you're making your payments. Okay, so then when we're doing this and it starts to work, then what do we want to do? We want to expand. So why do we want to expand? So Create Tailwind can sell me more life insurance policies. Emeritus can sell me more life insurance policies, or Lafayette Life or One America or whatever insurance company we use. No, so that you can get more of your money flowing to your banking system instead of somebody else's. Okay. So that acquisition and strategic expansion is, again, I've funded tons of acquisitions without any banker ever giving me permission to do that. I don't like bankers giving me permission. I don't like permission for anything. I want to be in control. So the Rothschilds, the Rockefellers, the Cargills, right? They didn't just build businesses, they built systems. Cargill, is that how you say that? That company is like the largest privately held company in the world. I think they're worth 70 billion, maybe 100 billion or something like that. But they do, like, it's in the Midwest. It's out of your balance sheet strength. The policies are counted as the cash in there 100%. You don't get 100% crediting with a universal life policy. Why? Because you can lose money. You get like 50% crediting with stocks. Why? Because you might lose 50% of value. But with life insurance in your PFS, you get 100%. So that boosts your balance sheet, your exit strategy. If you got a bunch of loans on here, you need a place to put windfalls. If you sell and you get a windfall, you could fund buyouts, succession. There's all kinds of things. Crisis liquidity. I mean, I had banks pulling lines of credit because they did an audit of a business at the worst time of the year and they were like nervous, and you don't have that. Like, I learned, don't do that. Don't be at their mercy. So the bank debt versus policy loans, with the bank debt, they're in control. With the policy loan, you're in control. And then, so that's a distinction. Another distinction is wealth erosion versus wealth recapture. What do I mean by that? Bank's interest, it's gone forever, versus recaptured into your own system. It's like water in the environment. It doesn't ever leave. It's just moving around, right? And then it's really when you're as a business owner linear versus exponential growth. Banks keep you on a traditional treadmill, and IBC compounds wealth while funding growth. It's exponential. Anytime you're just doing with the bank, it's linear. And, the question isn't what is the rate of return inside the insurance contract? It's how many times can I use the same dollar and still have it compounding for the future? Tax free. That's the question. And guess what? The answer is it's not going to surprise you. It's an infinite number of times you can use that money. Okay, so business owners ultimately play. The ultimate play isn't to own assets, it's to own the system that controls the assets. That's your infinite banking blueprint, is those steps. It's not complicated. It is, is it more complicated to know what should I invest in? How should I pay the payments back? How do I set that up? How do I report that on my taxes? How do I get to deduct the interest from the insurance company? Yes, we coach you on all of that. And on this new platform for the community, by the way, it's going to be available 24 hours, 7 days a week. And you just type in your question. It's going to be cool. And I'm going to train this thing to answer the question just the way I would answer the question, or Nelson would answer the question, or somebody like that. So that's the blueprint. That's the blueprint. This is what we need to do to control the banking function. All right. That's 21 minutes. Questions. CD Sisters, after 40 years, and Nelson's example was 600,000 different. Okay, so if you go to, I could do this like live in the next coming weeks if everybody would like to see it. But the CD sister versus IBC sister on page 45 of Nelson's book, Becoming Your Own Banker, right? Shows two sisters, 20 years old, putting $5,000 a year in for 7 years. One puts her money into a CD, one puts her money into an infinite banking policy. At 65, the IBC sister has actually $706,000 difference, more than the CD sister. CD sister starts off faster simply because the customer doesn't have to make an investment in the business, but the owner does. Right? I didn't have to make an investment in McIntyre Manufacturing. Wayne McIntyre did. Would I have if I would have understood it when I was 13? Yes. I would have loved to have been the owner of that business, because the owner of that business lived in Palos Verdes. The worker in that business, me, my adopted mother, lived in inner city Los Angeles, crime, small houses, crummy cars, crummy food, crummy everything, right? He sent his adopted kids to Pepperdine. I had to try to, take care of school on my own. That's the difference between an owner and a customer, okay? Customers start first, owners finish first. And I guess that's a great place to wrap it up for the week. Customers start first, customers start first, owners finish first. You want to start first, or do you want to finish first? I want to finish first. So thank you all for being here. Oops. Okay. Erica's got a question. I love it. All right. I almost did it. Okay. I have a life insurance policy for IBC set up in Lafayette, and it's owned in my personal name. Do I need to set it up another one that's owned by my corporation? No. What you do is you, an individual, loans money to your corporation, right? So you can own all the policies that you would ever have, Erica. And you just it's a real simple agreement. Erica agrees to loan Erica LLC, whatever your corporation is called, X amount of dollars. Then the banking system starts. And so, yeah, not a problem. Now, by the way, I got to tell a quick story. I had this business owner call me, and he owned this trailer business, a lot of money. And he said, Jim, you created a taxable event for me. I'm sitting here with my CPA. I need to talk to you right now. So I call, and he says, Jim, I have interest income. And I said, okay. Brian, the answer is Becoming Your Own Banker by Nelson Nash. If you send me your address, I will send this book to you. And I would look at Ownership too, my book that's not quite released yet, but I'll send you a pre-publication copy if you if you text me your address to 239-777-3624. That's my personal cell phone. I'll send your information to Lydia. It'll come out of Arizona. Okay, so this guy says, Jim, you created this taxable event for me. I have interest income as an individual. And I said, okay, Gary, you own 100% of that company, right? Yes. And I said, okay, so if you're earning 15% individually and your company is paying 15% corporately, that's a wash. And he said, and I said, and he said, well, you can't. So then I said, the insurance company, the money you're paying the insurance company, or the interest you're paying the insurance company, that's for borrowing their money, not yours. So Mr. CPA, can he deduct that? Yes. So actually, the 5% that you were paying the insurance company is deductible, Gary. So I'm not sure. And I heard the CPA go, okay, yep, I got it. Get him off the phone. And so they're like, okay, we're done talking. We got it. But that simple little thing was, I didn't understand that it worked like that. Right. And so I've been doing this a long time. I've seen, it's like if I were a brain surgeon. Now, nobody would want me to cut on your brain. Okay. But there's only so many things that happen to a brain. There's so many things, only so many things in banking that happen. There's only so many things with money that happens. I've seen it all. So we got one of these cases today. Okay, no problem. So anyway, I'll make that same offer to anybody. If you want to text me, again, it's 239-777-3624. Your address, I will send you Nelson's book or Ownership if you've already read Nelson's book, or both. I just want to help people do more and more and more. Mark, so the Gary was as an individual was earning 15% on this loan, but his corporation was paying 15% that he owned 100%, and he was an S corp pass-through corporation. So those things wash. The interest that he was paying the insurance company, he was first of all, the CPA was questioning whether he could deduct it because the CPA didn't understand how the insurance loan works. A lot of people, even CPAs, think when you borrow money out of an insurance contract that you're borrowing your money. You're not. You're borrowing the insurance company's money. So when you borrow from an institution for a business purpose, you can deduct that interest that you pay. All of a sudden, when he found out he could deduct the interest, then he was like, he thought, like, oh, okay, wait a minute. So he thought I was creating a taxable event because it was interest income. And he had a big policy. It was in the seven figures. Um, uh, Jim, just text me, and again at 239-777-3624. We can help you get started. If you need another book, we'll be happy to send you another one. Okay, I buy them in bulk and we send them out because I just concept, and I want to help people be financially independent and financially free and stop trading time for money. That's my purpose. That's my passion. And I'm here to help you. All right. We're going to wrap it up. Yeah. I'm sorry. Okay. Secura. So 239, I'll say it slow because I know I talk fast. Okay. And for some reason, if you don't get it, go to the website and just send me an email, jimoliver@createtailwind.com. And absolutely. I mean, well, velocity banking, and I know what you mean by that term, really, and it goes hand in hand. It's what you're doing with the insurance policy. So yes, and you can pay off your mortgage and you can use all of those things and pay it off faster. Becoming Your Own Banker by R. Nelson Nash. Exactly. It's a black book. Again, I get them in bulk. Lydia is 2 hours behind us. If you send me your information, it still might go out today, but it'll go out tomorrow at the latest. She's really good about that. Okay. So yeah, and would love to see you guys all next week. And velocity is everything. Creating velocity of money. Once I started doing that, I tell people that my policies won't hold all the money that's coming in. And I keep on having to expand. That's a good problem to have, I understand. But that's what happens. But I've been doing it a long time. And I still want to expand. Why? Because I get to have more impact on people. I get to help more and more and more people. And when I buy these businesses, I always give people opportunity for equity every single time. Brian has a great story about becoming an owner in his business, right? I mean, thank you all. Godspeed. We'll see you next week.